Wall Street is not a casino. In a casino, the house relies on the law of averages to slowly bleed you dry. But Wall Street? Wall Street relies on something far more powerful: asymmetry. The people at the top don't just have more money than you. For centuries, they have possessed entirely different technology, tools of observation, prediction, and execution that were deemed so powerful, so market-breaking, that they were kept hidden behind closed doors. Whenever an outsider discovered one of these tools, the financial establishment tried to ban it, bury it, or buy it. Today, we are opening the Forbidden Vault. We are going to examine 10 mathematical, physical, and digital tools that gave individuals an absolute, unfair advantage over the market makers. This is the forbidden knowledge of the financial world. Tool 1. The 1920s. Telegraph. Our first tool seems primitive now, but it was the original market breaker. Before the internet, before the ticker tape was ubiquitous, information moved at the speed of a train. But what if you could move information at the speed of electricity? In the late 19th and early 20th centuries, cunning operators realized that stock prices in New York and stock prices in Chicago or Philadelphia often fell out of sync. Wall Street brokers relied on this delay to fleece out-of-town investors. But a select few renegades leased private telegraph lines. They created the first high-frequency trading network. By knowing the closing price in New York minutes before the news reached Chicago, they bought low and sold high with zero risk. It was a literal cheat code. Wall Street exchanges panicked, trying to ban private telegraph wires from the trading floor to protect their local monopolies. But the seal was broken. The war for speed had begun. Tool 2. The Golden Pocket Watch. Look closely at the watch. In trading, knowing what will happen is valuable. Knowing when it will happen is priceless. Our second forbidden tool isn't just about speed, it's about time arbitrage. Legend has it that Nathan Rothschild used a network of carrier pigeons and fast boats to learn the outcome of the Battle of Waterloo a full day before the British government did. He stood on the floor of the London Stock Exchange and began selling off his bonds. The market, assuming he had news of a British defeat, panicked and sold everything. The prices plummeted. At the last possible second, Rothschild's agents bought up the entire market for pennies. By the time the golden pocket watches of London's elite ticked over to the next day, the news of victory arrived. Rothschild had multiplied his fortune exponentially. Wall Street and global exchanges spent the next 200 years passing insider trading laws to prevent this exact maneuver. They call it front-running today. But the elites didn't ban it to make things fair. They banned it so only the market makers, the modern exchanges, could legally look ahead of the order flow. Tool 3. The Dripping Ink. In the West, they tell you stock prices are rational. In the East, a 18th century Japanese rice trader named Munehisa Homma knew the truth. Markets are driven entirely by the psychology of men. Homma invented our third tool, the candlestick chart. While Western traders stared at physical certificates and raw numbers, Homma mapped human emotion. He used the open, high, low, and close of the market to draw visual representations of fear and greed. For centuries, this was a closely guarded secret in Japan, a forbidden technique that allowed Homma to execute a legendary 100 consecutive winning trades. When this tool finally leaked to Wall Street in the late 20th century, the old guard dismissed it as voodoo. But the underground technical analysts who adopted it suddenly had a map of the market's psychological state. Today, the candlestick is standard, but for 200 years, it was the ultimate hidden weapon against a blind market. Tool 4. The Tape Reader's Cipher. By the 1920s, the ticker tape was the lifeblood of Wall Street. It broadcasted trades as they happened. To the untrained eye, it was just a waterfall of numbers. But to a man named Jesse Livermore, it was a matrix he could read. Livermore didn't care about a company's fundamentals, he cared about the momentum of the tape. He developed a proprietary method of noting down prices in columns to spot pivotal points. He was one of the first humans to trade purely on price action and market manipulation. In 1929, when the entire world went bankrupt, Livermore shorted the market and made $100 million, equivalent to over $1 billion today. Wall Street hated him. They changed the rules of margin trading and short selling specifically to stop men like him. His methods were effectively outlawed by the creation of the SEC. They didn't want individuals breaking the bank. Tool 5. The Locked Ledger. What happens when you want to buy 1 million shares of Apple but you don't want the public to know? You don't go to the New York Stock Exchange. You go to the shadows. Our 5th tool is the Locked Ledger, known today as the dark pool. For decades, retail investors believed the price on their screen was the real price of the stock. It was a lie. Wall Street created private, unlit exchanges, dark pools, where institutional giants could trade massive blocks of shares in complete secrecy. The prices and volumes are kept hidden until after the trade is executed. Why is this forbidden? Because it robs the retail trader of true supply and demand data. Wall Street hid the ledger because if retail traders could see the whales moving their money in real time, the whales would lose their advantage. The public isn't allowed to see the real order book. It remains firmly padlocked. Tool 6. The Black-Scholes Equation. In the early 1970s, the options market was the Wild West. Nobody actually knew how to price an option correctly. It was all gut feeling and guesswork. Until 3 mathematicians, Fisher Black, Myron Scholes, and Robert Merton, built a mathematical lockpick, the Black-Scholes formula. It was a differential equation that accurately priced the risk of European-style options. When it was first deployed, it was like taking a machine gun to a knife fight. Traders who had the formula could instantly see exactly which options were mispriced by the market makers. They swept through the Chicago Board Options Exchange, printing money. The market makers were bleeding out. What did they do? They couldn't ban math. So they capitulated. They adopted the formula themselves, hard-coding it into the very fabric of the market. The forbidden tool became the law of the land, heavily regulated to ensure no outsider could ever use a pricing discrepancy against them again. Tool 7. Microwave chains. Remember the 1920s telegraph? The war for speed didn't end. It just went sub-millisecond. By the 2010s, high-frequency trading firms realized that fiber optic cables were too slow. Light bounces inside a cable, losing precious nanoseconds. So, they built the 7th forbidden tool. Secret, straight-line microwave tower networks connecting the Chicago Mercantile Exchange to the servers in New Jersey. They spent hundreds of millions to bore straight through the Allegheny Mountains just to shave 3 milliseconds off their trade time. Why? Because with that speed, they can see your order to buy a stock, race ahead of you on their private microwave network, buy the stock before you do, and sell it back to you a fraction of a penny higher. It is a legalized, invisible tax on every trade in the world. When whistleblowers tried to expose this, Wall Street lawyers fought tooth and nail to keep the algorithms hidden under the guise of trade secrets. Tool 8. The Hidden Hard Drive. If you analyze a company's quarterly earnings report, you are already the last person to know. You are the prey. The predators use our 8th tool, the hidden hard drive of alternative data. Wall Street doesn't wait for a retail chain to announce its sales numbers. Hedge funds buy real-time satellite imagery of parking lots to count the cars. They scrape millions of credit card receipts purchased from data brokers. They track the corporate jets of CEOs using private flight transponders to see if they are secretly flying to meet with potential merger candidates. This tool is the ultimate forbidden knowledge because it bypasses the stock market entirely. It is pure corporate espionage, sanitized and sold for millions of dollars a year. It ensures that the institutions know the exact health of a company weeks before the SEC forces them to release their public filings to you. Tool 9. Level 2. Order Flow. When a retail trader opens an app like Robinhood, they see a simple buy and sell button. They see the current price. It looks like a fair, open market. It is a facade. The ninth tool is the raw, unedited Level 2 order flow, specifically the mechanism known as payment for order flow, or PFOF. Firms like Citadel don't just execute trades. They pay brokers to route retail trades through them first. They get to see the exact positioning of millions of retail investors before the trades hit the lit exchange. Imagine playing a game of poker, but the dealer has paid for the right to see your hand before you bet. That is order flow. Wall Street has aggressively defended this practice in front of Congress, fighting tooth and nail against retail advocates who want to ban it. They know that if the retail trader ever got direct access to the exchange, the dealer's advantage would evaporate overnight. Tool 10. Jim Simon's Locked Codebook. And finally, we arrive at the absolute pinnacle of forbidden financial technology, the holy grail of quantitative trading. Our 10th tool is the Locked Codebook of Jim Simons. Jim Simons was a former Cold War codebreaker for the NSA. He realized that the stock market wasn't a financial institution. It was a cryptographic puzzle. It was a signal hiding within massive amounts of noise. He founded Renaissance Technologies and created the Medallion Fund. Simons didn't hire economists. He hired astrophysicists, string theorists, and cryptographers. They built a black box algorithm so complex, so ungodly accurate, that it consistently generated average annual returns of 66% before fees, year after year, for 3 decades. It is a track record that defies the laws of financial physics. What's inside the algorithm? Nobody knows. It is the most closely guarded secret in the history of capitalism. Even Wall Street titans fear it. The algorithm is so powerful that Simons eventually kicked all outside investors out of the fund. It only trades for its own employees now. It is the ultimate forbidden tool, a machine that solved the market, locked away behind NDAs, firewalls, and billions of dollars in legal protection. Wall Street wants you to believe that the market is a level playing field. They give you brightly colored apps, basic line charts, and talking heads on television to make you feel like you're part of the game. But the true game is played in the shadows. It is played with microwave lasers, satellite surveillance, hidden ledgers, and quantum mathematics. These 10 tools represent the reality of modern finance. The vault is closed. The tools belong to them. But remember this: every tool on this table was once a secret, and every secret eventually finds the light. Stay vigilant.